Unleash the Tesla Beast, or Unleash Disaster. Unveiling the TSL ETF. Welcome back to Chat ETF, your one-stop shop for all things exchange-traded funds. Today, we're diving deep into the TSL ETF. This bad boy aims to deliver 1.25 times the daily return of the Tesla, TSLA, stock price. Sounds exciting, right? But hold on a sec, before you jump in, there's more to this story. This video will unveil everything you need to know about the TSL ETF, from its potential benefits to the hidden risks lurking beneath the surface. We'll explore how the TSL ETF works, who it might be suitable for, and crucial factors that can impact its performance. So, buckle up, because this is one wild ride you won't want to miss. Question 1. What is a leveraged ETF? A leveraged ETF uses financial instruments like swaps and futures contracts to amplify the daily return of an underlying asset, in this case, the Tesla stock price. In the case of TSL, it aims to deliver 125% of the daily return, both positive and negative, of the Tesla stock. Question 2. What is the investment philosophy behind the TSL ETF? The TSL ETF doesn't explicitly follow a specific investment philosophy. It doesn't aim to actively manage its holdings based on fundamental analysis or market trends. Instead, it utilizes a leveraged strategy designed to amplify the daily return of the Tesla, TSLA, stock price. However, we can identify underlying features that may resonate with certain investment philosophies, even though the ETF itself doesn't actively pursue them. Here are some potential connections. 1. Short-term trading. The TSL ETF caters to short-term trading strategies focused on capturing daily price movements of Tesla. This aligns with the philosophy of technical analysis, which focuses on identifying trading opportunities based on historical price and volume data, aiming to profit from short-term trends. 2. Momentum investing. The leverage provided by the TSL ETF can be attractive to momentum investors who believe in riding positive trends. However, it's crucial to remember that the leverage works both ways, amplifying losses in downward trends as well. 3. High risk, high reward. The high risk, high reward nature of the TSL ETF may resonate with investors who are comfortable with significant potential gains in exchange for increased risk of losses. This aligns with some aggressive growth investing strategies. 4. Speculation. While not an established investment philosophy, some investors may use the TSL ETF for speculative purposes, hoping to profit from large, unanticipated movements in the Tesla stock price. However, speculation carries significant risks and should be approached with caution. It's important to understand that the TSL ETF doesn't actively pursue any of these philosophies mentioned above. It simply offers a leveraged exposure to the Tesla stock price. Question 3. How does the TSL ETF achieve leverage? The specific mechanisms used by the TSL ETF can be complex, but they generally involve the 1. Buying Tesla shares. The fund may directly hold a portion of Tesla shares to track the underlying asset's performance to some extent. 2. Using swaps. The fund may enter into swap agreements with financial institutions. These swaps effectively create synthetic exposure to Tesla, allowing the ETF to amplify its returns. 3. Using futures contracts. The fund may use futures contracts to gain additional exposure to Tesla. Futures contracts are agreements to buy or sell an asset at a specific price on a future date. Question 4. What are the potential benefits of investing in the TSL ETF? 1. Amplified gains. If the Tesla stock price increases, the TSL ETF aims to deliver 1.25 times the return, potentially offering magnified profits compared to directly owning TSLA. 2. Short-term trading. The TSL ETF can be used for short-term trading strategies focused on capturing daily price movements of TSLA. 3. Hedging. Some investors may use the TSL ETF in conjunction with other investments to hedge against potential short-term declines in the Tesla stock price. Question 5. What are the potential risks of investing in the TSL ETF? 1. Volatility. Leveraged ETFs, like TSL, are inherently more volatile than the underlying asset. This means that even small price fluctuations in Tesla can be significantly amplified in the TSL ETF, leading to larger potential losses and increased risk. 2. Compounding effect. Due to the daily rebalancing mechanism of leveraged ETFs, the compounding effect can lead to deviations from the intended long-term return compared to simply owning the underlying asset over time. This is particularly true for volatile assets like Tesla. 3. Decay. In downward trending markets, the compounding effect in leveraged ETFs can work against investors, leading to accelerated losses that may exceed the decline in the underlying asset. 4. Liquidity risk. Compared to widely traded ETFs, TSL is a less liquid ETF. This means that there may be fewer buyers and sellers, potentially making it difficult to enter or exit positions quickly and at desired prices. 5. Fees. TSL charges an expense ratio, similar to other ETFs, to cover its operational costs. This fee can eat into potential returns. Question 6. Who should consider investing in the TSL ETF? Due to the high-risk nature of leveraged ETFs, the TSL ETF is not suitable for all investors. Here are some factors to consider. 1. Risk tolerance. Investors should have a high tolerance for risk and be comfortable with potentially significant losses. 2. Investment experience. Understanding the complexities of leveraged ETFs and their associated risks is crucial before investing. Novice investors should exercise caution and conduct thorough research before considering TSL. 3. Investment goals. TSL is not suitable for long-term investment goals due to potential deviations from intended returns and decay over time. It is primarily suited for short-term trading strategies focused on capturing daily price movements. Question 7. Are there any alternatives to the TSL ETF? Several alternatives offer exposure to Tesla with varying risk profiles. 1. Directly investing in Tesla stock. This offers unleveraged exposure to the company's performance, experiencing the full price movements without amplification. 2. Investing in Tesla options. Options contracts can offer controlled leverage, allowing investors to potentially magnify gains and losses to a specific extent. 3. investing in ETFs that track broader indices. These offer diversification across multiple companies, reducing the risk associated with focusing on a single stock like TSLA. Question 8. How does the TSL ETF mitigate risk? It's important to understand that the TSL ETF doesn't actively aim to mitigate risk. In fact, its inherent design involves amplifying risk by leveraging the daily return of the Tesla stock price. Here are some key points to remember. 1. Leveraged mechanism. The TSL ETF uses financial instruments like swaps and futures contracts to amplify the daily return, both positive and negative, of the Tesla stock price. This means even small price fluctuations in Tesla can be significantly magnified in the TSL ETF, leading to potentially larger losses compared to directly owning TSLA. 2. Volatility. Leveraged ETFs like TSL are inherently more volatile than the underlying asset. This means their price can fluctuate significantly more than the Tesla stock price, leading to increased risk for investors. 3. Concentration. By holding primarily, if not solely, Tesla shares, the TSL ETF lacks diversification, which is a fundamental strategy for mitigating risk. Diversification involves spreading your investments across different assets to reduce the impact of any single asset's performance on your overall portfolio. Therefore, while the TSL ETF might be marketed as a way to potentially amplify gains, it's crucial to recognize that it does not actively mitigate risk. Question 9. What are some of the key factors that can influence the performance of the TSL ETF? The performance of the TSL ETF is primarily influenced by factors related to the underlying asset, Tesla stock, and the ETF's leverage mechanism. 1. Tesla, TSLA, stock price. Direct impact. The TSL ETF aims to deliver 1.25 times the daily return of the Tesla stock price. Therefore, any increase or decrease in the Tesla stock price will be amplified by 125% in the TSL ETF, significantly impacting its performance. Volatility. The inherent volatility of the Tesla stock price is amplified in the TSL ETF due to its leverage. This means even small fluctuations in the Tesla stock price can lead to larger swings in the TSL ETF's price, making it a risky investment. 2. Leverage mechanism. Compounding effect. Due to daily rebalancing, the leverage mechanism in the TSL ETF can lead to deviations from the intended long-term return compared to simply owning the underlying asset, TSLA, over time. This effect is particularly pronounced in volatile markets like the one for TSLA. Decay. In downward trending markets, the compounding effect in leveraged ETFs can work against investors, leading to accelerated losses that may exceed the decline in the underlying asset. This is because the daily rebalancing mechanism can force the ETF to sell assets at a loss to maintain its leverage, further amplifying losses. 3. Additional factors. Market conditions. Broader market conditions, like economic performance, interest rates, and investor sentiment, can indirectly impact the Tesla stock price, and consequently the TSL ETF's performance. Liquidity. Compared to widely traded ETFs, TSL is a less liquid ETF. This means that there may be fewer buyers and sellers, potentially leading to wider bid-ask spreads, and making it difficult to enter or exit positions quickly and at desired prices. Expenses. The TSL ETF, like all ETFs, charges an expense ratio to cover its operational costs. This fee can eat into potential returns, and should be factored into the overall investment decision. Alright, we've reached the end of our journey into the TSL ETF. Remember, the TSL ETF is a high-risk, high-reward investment. While it offers the potential for amplified gains, it also carries significant risks due to its leverage and lack of diversification. Before making any investment decisions, it's crucial to thoroughly research the TSL ETF and understand your own risk tolerance and investment goals. As always, here at Chat ETF, we strive to empower you with the knowledge and resources you need to navigate the exciting, yet complex, world of exchange-traded funds. If you enjoyed this video, don't forget to like and subscribe for more ETF-related content. And let us know in the comments below what other ETFs you'd like us to explore.